All right, let's go to our guest analyst. It's going to be Mr. Oliver Slope, Blue Line Futures in Chicago. We got 90 seconds for you, Oliver. I mean, there's not a lot to talk about, so that might be a struggle.
Yeah, well, a little bit of weakness here in the grain markets today. I think that's probably healthy. We got that corn market up near that psychologically significant 450 level, and with a penny of the October 2nd high, 452 and a quarter, and backing off. And I wouldn't be surprised to maybe see some additional pressure here into the end of the week and maybe moving forward. The trade for a lot of traders I've been talking to has been, long corn, short beans, and so I wouldn't be surprised to see that unwind a little bit. So my favorability has shifted from corn out to optimism in soybeans. I also think there's a lot of headwinds in soybeans regarding tariffs, South American weather, production, big balance sheet. That's not new news. We've been talking about that for months, right? I think there's an underpriced risk that there could be potentially a hiccup or a change there, and I think that's the catalyst that could help beans out. Not to say it has to happen, but I think there's a discounted probability that it could.
Yeah, I mean, the weather doesn't get more perfect than it is right now down there, too. And so it'll be, I think that's a good contrarian call. All the news is out there. We'll see. But you're right. There's been a lot of folks on that trade. We'll see if it kind of hangs in there for them. But other than that, anything else? I mean, the WASD's kind of in our rearview mirror. Are we going to have to wait for updates on South American weather every day and then worry about the Jan WASD? Is that what our life has in store for us right now?
Yeah, tis the season, watching weather maps of a foreign country. That's just the world we live in. I'm sure we're going to continue to get trade headlines, but I think the nice thing is that last trade headline we got about a month ago regarding Mexico and Canada didn't really move the market yet. So it seems like the markets may be, already set up for those headlines to come.
All right, it can't be a surprise. Stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more livestock with Mr. Oliver Slope. He's with Blue Line Futures in Chicago. We'll be right back. 84.42 is last there, and we got an April board up 7 cents to 88.32. Very quiet trade. Let's bring him back in. Mr. Oliver Slope, he's with Blue Line Futures. Again, 90 seconds for you. That, again, it might be too much. We'll see what you got.
Well, the cattle market, specifically live cattle, just been on an absolute tear. We've gotten a surge higher in the cash market and a breakout on the charts, and what has amounted to about a $7 rally in February live cattle this week, trading to the highest level since March. How much more upside is the gazillion-dollar question? If you're bullish this market, you don't like to see the reversal off of those highs and then a weaker close like we may be coming into today. And the other thing that maybe draws a little bit of caution is the fact that the funds are just so darn aggressively long these livestock markets, not just live cattle, but live cattle, feeder cattle, and lean hogs. Last week's Commitment to Traders report had them net long about 122,000 contracts. Not a record, but certainly at the upper end of the range as far as position sizing goes. And same with feeder cattle, net long about 19,000 contracts. That's only 2,000-3,000 away from a record long there. So a lot of people on the same side of the boat in these cattle markets. It'll be interesting to see if the fundamentals can keep that strength and the funds around. My concern, especially if those that have downside risk, what if the fundamentals stall out and maybe turn a little bit more negative? There's a lot of people rushing for the exit, so I think looking for downside protection at these levels is certainly something to consider.
I mean, you speak truth. I mean, because last year there was nothing really changing in the fundamentals last year. The funds just decided to get out all at once, and boy, oh boy, that was a rough one. So you're right. I mean, if you've got them and you've got money in them, hedge them. How about that? That's a good idea. Thanks for coming on, Oliver Slope, Blue Line Futures, coming to us.